Welcome back, Alpha Hunters. Hope everybody is doing tubular this Tuesday. Starting the live stream a little bit late today, as I had some a lunch with a very special friend, very close and dear friend. So let's just get on with what is going on, because I do want to get into Microsoft and Alphabet, as they will both be having earnings today after the bell. A little bit of a gap down. Guess probably better to lead off with how we ended Monday. I mean, we ripped here on Monday. That last hour yesterday, I don't know if there was a major news announcement, but it seemed like there was, because we just popped and it just kind of took off there in that last hour. Very strong move, and we weren't doing really anything up until that point, and then it just kind of popped and kind of took off. That was like the entire day's action was basically right there. So yeah, there you go. A little bit of a gap down, but we haven't done too much on Tuesday. Hey, maybe we'll pop in the last hour and just kind of skyrocket again. But there's some very interesting things kind of going on in the market, across the market. So, but yeah, SPY not really doing a whole lot, and it has traded kind of mostly flat throughout the day. It has hit a positive territory very briefly, kind of like two times throughout the day. Very quickly in the first 30 minutes it did, and it sold off as we got the JOLTs jobs report data this morning. And then midday, about 2 hours ago, it was up there for about 20, 30 minutes. But it has come back down from those levels. Qs are selling down currently at session lows right now. Oh my gosh, it's pandemonium. Don't worry about it. Well, I mean, I'm gonna give you a reason to worry about it, but yeah, I mean, makes sense, I guess, that we eventually see some bearishness on the area of the marketplace that has led for much of the past year. So, yeah, there you go. Q's doing bearish things today. A lot of people probably taking profits before we get into big tech earnings and the Fed, which is tomorrow. IWM, nice gap down here on the IWM, has traded bearish. IWM Qs both down about 0.8%. SPY down just below the neutral line. But yeah, I mean, IWM not trading super bullish today, but we'll check the daily pictures to see if that gives a little bit better indication. DIA has continued its grind higher. This looks very promising. Nice close spot yesterday. Nice little gap down. Kind of pulled back a little bit, and then nice run here in the second hour of the day. I mean, very, very good looking market here on the DIA. Has continued to kind of just push higher while the Qs kind of continue to push lower. That's kind of interesting. RSP, the equal weight SP 500. Nice gap down as well. Kind of choppy there in the first hour or so. In the second hour, very nice strong move higher at session highs currently there on the RSP. So, stocks across the SP 500 are doing pretty good. It's just not the heavily weighted ones. Is basically what we are kind of seeing here, looking at these five market ETFs. RSP also making a high over December. Okay. RSP looking like it's going to continue higher. Kind of mentioned that at the end of last week. We haven't really broken down. Kind of looked like it was consolidating. We're going to push higher. So yeah, there you go. Continue to push higher there on the RSP. DIA continuing to push higher here on the daily. Looking pretty good. All-time highs. Again, another day of it. IWM. Very strong move yesterday. We have gapped down below that level. I would think this is just a pullback. To me, IWM, with how strong yesterday kind of was, well, I kind of say it's strong, but then you look at the volume, and it wasn't a super strong volume. I don't really know how to think about that. I still think it might just be a pullback. I think it might continue to push higher. It's going to depend. Really comes down to today and tomorrow with earnings, and then Fed. Yeah, I'm not one to want to do something. I can understand trying, starting to be a little bit more bullish here on the IWM, but I wouldn't want to be doing anything right now. Qs, down 0.75%. Qs continue to still not make highs. They haven't even taken out yesterday's high. And taking a look at the SPY, the SPY actually did take out yesterday's high and is at all-time highs. The Qs over the past 5 trading sessions have pulled down pretty good, and actually not too far from yesterday's lows. And the SPY is not. The SPY is not. So we're seeing some pretty good rotation out of that big tech area. Even though yesterday afternoon, they ripped it pretty good. Big tech area ripped it pretty good. But we're seeing some pretty good rotation out of those areas today. And have kind of continued to see that over the past 4 days. So, Qs, SPY, there you go. Take a look at the VIX. What we got on the VIX? VIX just kind of hanging out, still kind of elevated from the lows of last week. Not really too much kind of going on here with the VIX. Just kind of the middle of where it's been over the past month. Not really much else to say. Not much else to say. DXY. Well, the dollar definitely came down from its highs, kind of where it was yesterday when I was briefly talking about it. And let's take a look at an hourly. There we go. So, yeah, we definitely came down pretty good yesterday. But we haven't really kind of broken down. So we're just still in that. We're just still sitting here, consolidating, throwing upper wicks and lower wicks. So we'll probably get the direction here for the dollar, DXY, tomorrow as we get the Fed data or the Fed decision. GLD, dollar's flat, GLD kind of flat, has traded down from its open. Okay, yields broke down yesterday. The one thing I will say is yields and dollar both. When we got JOLTs data, did pop pretty good. You can see dollar also popped there pretty good. So yeah, yields and dollar popped pretty strong there when we got that data. Breaking, okay, the 10 and 2 kind of breaking this little low here. All right, so we had lower highs. Interesting. So are we gonna drop off here and make get more inverted? So the 2 years pushing higher again. Obviously the 10 years down. So that's interesting. Okay. So we definitely have this on the 2 year here. We definitely have the shoulder, neckline, head, neckline, shoulder kind of starting to form here. So if we break out of here tomorrow, I mean, that's going to be an inverse head and shoulders there on the 2 year yield. I don't think the 10 year is nearly that clear. Yeah, it's not that clear there on the 10 year. So, be curious to see how that kind of shapes up here over the next couple of days. HYG, high yield corporate bonds. Tried to break that upper trend line, upward, or that downward, the upper end of this downward trend line yesterday, but we came back below it kind of today. I can basically tell that. Anyways, kind of I don't know what to do right here. I think really right now it's, I mean, obviously we're doing a pretty good consolidation in here for the past month. I would say it's a good time just to wait, see what happens tomorrow when we get fed, see what the market kind of does, and then make sure whatever it does tomorrow into close, that it follows through on Thursday. You probably start taking positions as we start to move pretty good tomorrow. But I think you're going to want to make sure you're kind of tight with some stop losses, possibly. Make sure it doesn't reverse, that kind of stuff. Make sure we get the follow through on Thursday. LQD though, starting to curl up here. Okay. TLT. Yep, getting a nice little bullish day coming in there on the TLT. Okay, take a look here. Sector rotation. Tech, big underperformer on the day. XLK, XLC also underperforming, and real estate. Real estate, though, over the past 30 minutes has actually done pretty well. In line with the market is discretionaries and industrials. Outperformers, healthcare, utilities. Utilities over the past 30 minutes also doing pretty good. Staples, energies, materials doing pretty good there, and financials, XLF there doing pretty good. Intraday taking out any gaps. Yeah, you can see tech has just kind of gotten crushed throughout the day. Okay, XLC doing pretty good. Or not, I'm not doing pretty good. Still kind of bearish there on the intraday. XLY kind of hanging in with the market pretty tightly there throughout the day. XLV, healthcare, real estate, industrials outperforming, staples, utilities, financials, materials, all outperforming pretty good. Energy's day's best outperformer. Okay. Crude oil, nice bounce today. Basically, yesterday was kind of just, start of a pullback. Essentially, pulled back to the 10 EMA. Kind of mentioned that could be a possibility. Have to see here if it doesn't break that down in a couple days. Gasoline bounced pretty good this morning. Wow, basically ever since the market kind of opened, or slightly about an hour before the market opened, this gasoline's been running pretty good. Heating oil down 0.8%. Okay, so energies not really doing all that great today, but doing better than what they were earlier, and maybe the stocks are just doing that much better. All right, Microsoft. So let's talk about it. Microsoft, the world's largest company. Earnings today. Let's take a look at this. I was thinking about some things here. So earnings are definitely trending up. Oh, that's revenue. Sorry. Earnings last quarter were pretty good. Earnings have been trending up over the past several years. Even quarterly, looking pretty good. Obviously, back in 2022, they had a nice little dip there. 23 started to turn things around, started to accelerate. So, yeah, be interesting to see how this comes in. Revenue, not so, and that's the tough thing, is it doesn't really seem like revenue is growing all that much. Well, past like 2 or 3 quarters, there was a quarter here between Q3 and Q4 of last year, which I don't even know how these are labeled. Anyways, between Q3 and Q4, it increased by $4 billion. That's definitely been the biggest increase over the previous 2 years of earnings. So, okay, real quick, while we're kind of talking about Microsoft, this has been a hell of a run. I'm not going to deny this is not a huge run here. This has been a pretty good run. Previous all-time high back at the end of 2021 was around 350. We're at 400, a little bit over 400 now. So I guess the question is does the earnings and the growth of earnings going forward justify the stock being, let's see, over those peaks by like, I mean, how much is this? I can't even do simple math in my head right now. Give me, yeah, about 16, 17%. And let's see. If take into account these current earnings, are we looking at? See, back then we were at like 2.48. Now we're at like 3. Yeah, that makes some sense. My my thing is I think people are still just way too aggressive on the growth side of things. So, but technically, and I'm just I was kind of thinking about something I want to look at on the fundamental side, which is why I was looking at that. On the technical side, I mean, this is a pretty strong move here over the past 4 months since the beginning of October, right? Now, most of the market bottomed at the end of October. Microsoft actually bottomed at the end of September, and looks. I mean, it's been looking pretty good ever since. Obviously, we know November was absolutely a crush job. Microsoft was very flat in December, didn't do like anything, and it's been very strong here in January. The way I would play this, I would actually be bearish. Um, just just from all the bearishness that we have seen, I would say like a 5% upside. I would leave some room for a possibility of a gap up. I would take a small position on some being bearish here because I think the downside risk or the downside gap. I'm not going to say Microsoft has a risk to its business, but the equity side could have, right? There could be a lot of people that take profit on earnings. And I think there could be a pretty good gap down. But I think a 5% kind of leaving some buffer room here. So maybe up to like 430. I think it would be a pretty good cushion there to, if we kind of get into and play in like the 420 area or something like that. And we kind of start selling down or something like that if we gap up. But if we gap down, I think you're going to want to have already been in up at this level. If we gap up, I don't think we'll have a significant gap up. But would we gap up 5% on Microsoft? I don't know, man. Microsoft doesn't gap like that normally. Like, this was a pretty large gap here on Microsoft last earnings. This was 4.5% roughly. And it sold off for 2 days. Right? It came down to the moving averages. So that's kind of what I'm saying is like I think you could have some wiggle room in there. I think being bearish on Microsoft over earnings, not a hugely bad play. This is a pretty good gap, but this is a hugely different area of where we are in the stock. We actually did gap up 7.75% back in May of last year or late April. Other than that, there was a bit of a gap down there back in January last year. Back in October of 22, we gapped down pretty good. We all know what was going on back there. So, I don't know. To me, I think the gap up would be a stretch, in my opinion. And that's why I'm saying, leave some cushion. And, if you're bearish here today and it gaps down, I think you might be able to build into a position, be bearish. I don't know how aggressive I would be. I might just say, hey, if it gaps down, take the profit, take the win, and move on. But that's just kind of where I'd be on it. Anyways, Microsoft, I can understand taking a much smaller position. I don't like earnings plays, but Microsoft, to me, is not one that's like hugely bullish over earnings. Not typically, not like on gaps and stuff like that. So that's kind of where I'm at with it. And mostly because, it's at all-time highs, right? It's hitting all-time highs today. If it was like at a much lower level, I probably wouldn't say that. But since this is hitting all-time highs over the past, like the entire month of January, pretty much. Let's see, outside of like the first week and a half, it's pretty much hit all-time highs for the past 3 weeks. So that's where I'm like, I wouldn't mind taking a small position, bearish, but I'm gonna leave some pretty good, about 5%, up to about 430, of a cushion there to say, hey, if it does gap up, I'm not going to lose my shirt. I'm not going to sweat too much about it. But if this thing gaps down and starts selling off, I mean, you're going to be glad you were in here. You get a lot more kind of ability to play defense if we gap down, right? So, anyways, it's kind of ended on Microsoft. Let's talk about Alphabet. Recently hitting all-time highs. Alphabet. Oh man, these two companies. Good grief. Earnings have been coming back. That's one thing that's kind of interesting here on Alphabet is, I mean, it's I don't see how. Okay, I guess this makes sense because when we were at previous all-time highs back in Q4 of 2021, that's when we kind of had the earnings peak, and then we had the earnings pull down, and then now we're back up to that roughly the same EPS. And I think Alphabet has a lot of risk to it, and so I think Alphabet has much more risk to its business. And if you were to make me pick between one or the other on Microsoft or Alphabet, I would say I would rather be bearish on Alphabet. That's just kind of where I'm at. It's hitting all-time highs today. I think AI has a much more substantial threat to their search business revenue model, and definitely replacing that. So that's just kind of where I'm at with Alphabet. But basically the same kind of deal. Take a few percentage points. Yeah, take a few percentage points up to, let's see. And you know what? You could probably even play both of them. I'd say 160. Say 160. That's a 5% gap up. You know, it missed it pretty good back in October. So if we have a pretty good gap down like that, I mean, that was a 9.5% day down. So if you take a small position today, it might, 9.5% down. I mean, that's looking pretty good there. Let me see. 9.5%. I mean, be back down below 140. So that'd be an interesting one on Alphabet if we did see that, because I mean, obviously that'd be a huge false breakout here over this past 4 trading days. If we did see that, but this is the company that I think has the most to lose from AI, which is why they are, rapidly trying to come up with their solutions to generative AI and Gemini and all that kind of stuff. So, yeah, Alphabet, big time. It could be a big time play. That's all I got there.